Welcome for the third webinar of this series about how to save on taxes. Today we are talking about protecting your family and save on taxes. The other webinars of the series, you can find them on YouTube, LinkedIn and Facebook. Let me introduce myself very quickly. My name is Patrick Malger. I am one of the founders of Taxx.lu. Taxx.lu is a website that was launched in 2018 that helps everyone to get their tax return here in Luxembourg done. On the left side of the screen, you can see a QR code. By scanning that QR code, you can schedule a call with one of our experts in our team to discuss your personal tax optimization potential. So if we are talking about tax optimization, what we are talking about is the deduction of different expenses on your tax return, allowing you to save on taxes, and the tax savings, they depend mainly on your revenue. We are coming to this in a second. So what is the amount of taxes you could save with tax optimization? But basically it depends on your income. A few examples. If you are a single with a gross monthly salary of 3K, then your tax gain is more or less 26% of any deduction. If you are earning 5K per month gross salary, then you are already around 42% of tax savings. And if you are earning 10K, you are at 43%. What does this mean? But it means that if you are deducting 1,000 euros on your tax return, it means that you will have a tax gain of 430 euros. So 43% of every deduction. What are those deductions? Basically, on the Luxembourg tax return, you have two main categories. You have what is called special expenses. There you can find interest you are paying on loans. You have insurance premiums that you pay for, premium pension plan premiums, but also contributions to a home savings plan. On the other hand, you have what is called allowances. Mainly it's the cost for childcare and domestic help. For example, the crash for your kids, but also the cleaning of your home if you have hired a person for the cleaning of your home, or if you hired a company to do that work. Extraordinary expenses are more extraordinary, so we are not going into details, but it could be, for example, money that you're sending to your family that is living abroad. If your parents have no pension, for example, it could be possible to deduct those expenses, but the criteria are quite severe. All the webinars about those different topics, you can find them on YouTube, Facebook, or LinkedIn. Just enter Taxx.lu and you will find them. So this week on Tuesday, we had a webinar more globally about how to save on taxes. Yesterday, we talked about preparing a pension and save on taxes. Today, we are talking about protecting your family. And tomorrow, it will be all about the home savings plan. So what are your options to protect your family? Basically, today we will talk about different insurances, different life insurances. We will talk about the outstanding balance insurance, and we will also talk about private health insurance. Pension plan, we talked about it yesterday. However, it could also be a good way to give some protection to your family. We are coming to this at the end of the webinar. So how can you deduct insurance premiums? First, you have to know that interests you are paying on the personal loans and insurance premiums are in the same category. And for each category of deductions, there are maximum deductible limits. So here in this category, the maximum deductible limit, it's 672 euros per family member in the household. So for a couple with 2 kids, they can deduct a maximum of 2,688 euros. Interest expense on loans, but it's mainly consumer loans. For example, a loan that you contracted for an acquisition of a car, but could also be credit card interest or overdraft interest on your bank account. Insurance premiums, the most common, it's of course the insurance for your car, where the civil liability insurance is deductible. But you can also deduct life insurance and medical insurance that we will talk about in a few seconds. So what is a life insurance? Life insurance basically is an insurance that you are subscribing to protect your family, for example, your children, your spouse, and there are different types of life insurances we will see in a minute. In case of death before the end of the contract, the beneficiaries, so your children, for example, would receive, thanks to this insurance, a certain amount of money. And in case of life at the end of the contract, then it's for some types of life insurances, it's also possible to get money out of the contract if you are still alive at the end of the contract, basically. So what life insurance would be the best for you? I will present you a few examples from our partner LaLux. Here's the first one, LaLux Education. Basically, the goal of this life insurance is to build up a savings for your children, or for your child, while benefiting from tax deductions. So basically, the goal is to set up a savings so your children can go to university, for example. A concrete example, if you are a couple, both 13 years old, and you are investing 100 euros per month into such a life insurance for 18 years, for example, at the birth of your child, you start the contract. Then, in case of life of the two parents, so if the parents are still in life after 18 years, then your kids will receive more or less 800 euros each quarter for 5 years. So in total, they would receive, with this example, 16K for example, go for their studies. In case of death of one parent, they would receive on top of the 60K and another 44,000 euros. And in case of death of two parents, they would receive a lump sum of 88,500. In case of a death due to a traffic accident, in case of the death of one parent, they would receive 88,500 euros on top of the 16K. And if two parents would die in a traffic accident, they would receive a lump sum of 177,000 euros plus the 16,000 euros at the end of the contract. What's the tax advantage? So if we are looking at an example with a couple with a taxable income of 100K, deducting over all the time of that insurance, the premiums you are paying for that life insurance would mean that you could get the tax gain of 9K. So at the end, such an insurance would only cost you 12,600 euros, knowing that in the best case, meaning both parents are still alive at the end of the contract, they would receive, the kids would receive at a minimum of 16K of money. Another type of insurance from LaLux, it's Easy Life Foresight. Here the goal is more to protect the family in case of death. So there will be no money paid at the end of the contract. So here with an example of an individual 30 years old contracting such an insurance for 100 euros per month for 10 years. At the end of 10 years, there will be no payment out of this contract. However, if during those 10 years that a person would die, then in case of a normal death, the beneficiaries would receive a lump sum of 184,000 euros. In case of death due to an accident, they would receive 735,000 euros. And in case of a death due to a traffic accident, they would even receive 1.28 million. That insurance as well is deductible on the tax return. So if you would invest 12,000 euros over 10 years, you would have gotten a tax gain of a little bit more than 5K. So at the end, this insurance would only cost you 7,000 euros over 10 years. A more specific insurance, it's outstanding balance insurance, which basically covers a mortgage. So if you would die, then this insurance would reimburse on your mortgage. So your children, for example, wouldn't be with that debt anymore. For this kind of insurance, you have the choice between paying it annually or monthly, or you can also opt for a single premium payment. So basically, you are paying the entire insurance at the beginning of the contract. it makes a difference in terms of tax savings. So, for example, if you are opting for monthly payment, those premiums will be included in the maximum deduction you can deduct for insurances in your tax return. So, the 672 euros per family member. If you have already 2-3 cars that you are deducting, maybe a private health insurance, then very quickly you are over that maximum deductible limit, and a deduction of an outstanding balance insurance wouldn't have any positive impact on your taxation. However, if you would opt for the single premium payment, so paying everything at the moment of the subscription of the contract, then you have higher maximum deductible limits, and those maximum deductible limits are 6K per person, so per adult person in the household, plus 1,200 euros per child, plus 8% per year exceeding 30 years. So an example of a father 40 years and a mother 38 years with 2 kids, they could deduct here a maximum of 24,960 euros. What does this mean in terms of tax savings? Basically, if this family has a taxable income of more or less 120K, by deducting this single premium, they would save for that year 10,432 euros in taxes. Meaning that if they are subscribing for such an insurance for almost 25K, deducting it on the tax return, tax savings would be 10,432 euros. So at the end, the net price for this insurance, thanks to the tax savings, would only be 14,528 euros. Good to know. Those single premiums can be deducted every 5 years. So, for example, if you bought a house 5 years ago, and at that time you already paid an outstanding balance insurance by single premium, and now you want to extend that house and you will subscribe another mortgage, then you could cover this new mortgage as well and deduct it again after 5 years on your tax return. Other type of protection is the private health insurance. There, Lalux and DKV Luxembourg, they have the product Easy Health. They are, for example, covering doctor visits, hospital stays, glasses, contact lenses, dental care, kinesiotherapy, osteopathy, and much more. Basically, they are reimbursing a lot on everything that CNS, so the public healthcare system, is not reimbursing 100%. A few examples: if you are going to a physiotherapist, for example, so part of it will be taken in charge by CNS. The other part, if you have this private health insurance from DKV, will be reimbursed by DKV. The same for glasses, where you can claim up to 500 euros every 2 years. Crowns, so if you have dental care, DKV is reimbursing up to 600 euros per crown. The same if your kids need some orthodontic treatment, there as well DKV is reimbursing you basically 80% of the part that CNS is not reimbursing. If you have to go to a specialist clinic, even abroad, in a private clinic for some special treatment, then DKV will also reimburse you on that. And the same, you have like a special travel insurance. So, for example, if you would go for skiing holidays and you would have an accident on the slopes and you have to be rescued by an helicopter, get flights to a private hospital, all this will be reimbursed by DKV private healthcare insurance. How much does such an insurance cost? But it depends mainly on your age. So here an example for a couple aged 30 and 28 with 2 kids, but they would have to pay 154 euros per month to cover the entire family. Thanks to the deduction on the tax return, they could save 770 euros per year on taxes. So at the end, thanks to the tax savings, this insurance would only cost them 90 euros a month. A little example of reimbursements over 1 year. So if during 1 year the father would go to 5 osteopathy sessions, would buy contact lenses, would have some medication that CNS is not reimbursing 100%, mother going to see a physical therapist and has a crown made, and the children going to see a doctor and buying glasses. At the end, here in this example, DKV would have reimbursed 1,830 euros for the annual price for this coverage of 1,080 euros after tax savings. How can I protect my family with a private pension plan? Basically, a private pension plan's goal is to save up for later on for your pension age. Basically, it's a plan where you're investing money now that you can deduct on the tax return and enjoy tax savings. And at earliest at age 60, you can access that money. Have a look at our webinar from yesterday, where I'm going more into details about these private pension plans and the advantages of it. It can also protect your family. If, for example, you would die before the end of the contract for this private pension plan, age 60, as I mentioned, for example, then at the moment of your death, the money goes to your children, for example, or your partner at the moment of your death. These types of plans are also not used by Luxembourgers because the money will be paid out at age 60, and age 60 very often children are coming back from university, are founding a family, are maybe buying their first apartment. So when you are getting this money, you are free to do with it what you want, and a lot of people are giving this to the children so they can start more easily their life. How much would you get out of contract? As mentioned, have a look at the webinar from yesterday. But if you are, for example, investing 266 euros per month for 20 years, you can have more or less 83,000 euros at the end of the contract, knowing that for this period you would have saved almost 27,000 euros in taxes. After 30 years, you could expect more or less 150,000 euros, and over those 30 years, you would have saved 40K in taxes. Which products are suitable for you? But this basically depends on a few criteria. First is, of course, the family situation. Are you married? Do you have kids? But also revenues, because the revenue is determine how much taxes you could save, and of course as well the age. So it's very hard to give you a concrete answer to the question what product would be best. Easiest is to schedule a call with our team, and then we can go through the situation together and tell you what would suit best. Another option is to do your tax return on Taxx.lu. After the entire process, you will get your tax return, but on top of that, you will also have a free analysis of your tax optimization potential. So basically, the system will determine what are the maximum deductible limits you did not reach, and if you would reach them, how much taxes you could save. Afterwards, you can ask for a contract right away on our website, or you can schedule a call with our team, and then we can go through your tax return together and tell you what makes the most sense here. So don't hesitate to schedule a call with my team. If you have any questions regarding the webinar or regarding your tax return, just contact my team as well on help@taxx.lu. And that's the end for our webinar of today. Don't miss the one about the home savings plan tomorrow, and I wish you a perfect day. Thank you.